1.3.9 Appropriation Account. The unappropriated income or profit after tax and dividends is posted to the retained income account. The calculation of this amount is done in the appropriation account. The appropriation account is the last of the final accounts and is drawn up step by step as follows. Step 1. Post the correct net profit before tax from the profit and loss account to the appropriation account. Close off the income tax account to the appropriation account. Close off the ordinary share dividends account to the appropriation account. And 4. Calculate the remaining amount as the balancing figure at the end of the financial year and post it from the appropriation account to the retained income account. Example 5. The information relates to Sunnybill Limited and is taken from the financial records on 28 February 2025, the last day of the financial period. Required. Show complete entries in the open ledger accounts for the year ending 28 February 2025. Information. Retained earnings balance on 1 March 2024, 143,000 Rand. Net profit for the year before tax, 780,000 Rand. Income tax calculated at 30% of the net profit. We should calculate this amount still. And ordinary shares dividends, total dividend for the year, 450,000 Rand. In the General Journal of Sunnybill Limited, you will open a retained earnings account. On the credit side, we will then take our balance brought forward. Balance brought forward. And the balance brought forward is 143,000. Then we'll go to our nominal account section. We'll open an appropriation account. On the debit side, 2025 February the 28th, we will first record our income tax that we need to pay. So we'll write income tax. It goes to the General Journal. And to calculate the income tax, it would be 30% of 780,000, which is 234,000. We would also then close off our ordinary share dividends. Ordinary share dividends. Also the General Journal. And that was 450,000 as stated in the question. Then on the credit side, 2025 February the 28th, we will write profit and loss. Also the General Journal. And that would be 780,000 because our net profit before tax is 780,000 given. So your main total would be 780,000 on both sides, debit and credit. So our balancing figure, which goes to the retained income account, also general journal, would be 96,000. Now the 96,000, as I said, is your balancing figure. So it's the 780,000 minus the 450,000 minus the 234,000. So then you go to your retained income on the credit side. You will close it off to the appropriation account. Also general journal. $96,000. To give a subtotal of 239,000. And this is how you would complete the retained earnings and appropriation accounts. Exercise 1.1 required 1.1.1. Match the concepts in column A with the descriptions in column B. Write only the letter A to E next to the question number I to V on the answer sheet. Okay, so column A, which is shareholders, directors, current assets, financial assets, and auditors, we must match with column B, which is the description. So shareholders would be C, owners of a company. So let's write C. Directors would be E, individuals who are appointed to manage the company. E. Current assets, that would be A fixed deposit of 80,000 Rand expires in the following financial year. So let's write A. Then IV, financial assets, that would be B, an investment of 500,000 is made at 6.5% interest over a period of 5 years. So let's fill in B. And then V, auditors, that would be D, qualified accountants who give an opinion on the financial statements of a company. So let's fill in D. Okay, so the correct answers would have been C, E, A, B, D. 1.1.2, use the information and transactions relating to Wonder Limited to complete the following. A, the open ledger accounts for the financial year ending 28 February 2025, properly balanced or closed on the last day of the financial year. Pay attention to dates. And B, calculate the total ordinary owner's equity in the company on 28 February 2025. Information. Balances on 1 March 2024, the start of the financial year. Ordinary share capital 635,800. Retained earnings 270,000. Shareholders for dividends, final dividends on 20th February 2024, 37,400. SARS income tax with a credit balance 2,300. Note, the company has authorized share capital of 400,000 ordinary shares, and on 1 March 2024, 187,000 shares were in issue. Transactions 2024 March the 5th, pay the amount owing to the South African Revenue Service via EFT. March 13, pay the amount owing to the shareholders with regard to the dividend. August 21, pay a first provisional income tax payment of 85,000 Rand via EFT to the South African Revenue Service. September 2nd, declare an interim dividend of 15 cents per share on all issued shares. September 15, buy back 37,000 shares at a repurchase price of R4.20 per share. October 25, pay the interim dividend to the shareholders. November 30, issue a further 200,000 shares at an issue price of R4.50 per share. 2025 February 25, income tax for the year is estimated at 190,000 Rand, and EFT transfers motor SARS for the outstanding amount. February 28, the net income for the year as per the profit and loss account, correctly calculated, amounts to 620,000 Rand. Income tax for the year amounts to 30% of the net income. The directors decide to declare a final dividend of 12 cents per share on all issued shares. General Ledger of Wonder Limited. We'll open the ordinary share capital account. On the credit side, 2024 March the 1st, we will have a balance brought forward. And our balance brought forward is 635,800. Then on September the 15th, we repurchased 37,000 shares. Remember, this repurchase, we have to calculate the average share price. So to calculate the average share price, we take the 635,800 Rand and we divide by the 170,000 shares in issue on that date, and we get R3.40. So on the debit side, we will write bank. We will go to the cash payments journal to make the payment. And the amount is 125,800. Once again, this amount was calculated by taking the 37,000 shares that we're repurchasing times by the average share price of R3.40. Then on November the 30th, we issued a further 200,000 shares at R4.50. So we will go to our cash receipts journal. We will write bank. And the amount will be 200,000 times R4.50, which is 900,000 Rand. This then gives us a main total of 1,535,800. Remember, we need to make the same as the debit side. So again, we write down 1,535,800. So our balancing figure, we will write on the debit side 2025 February the 28th, balance carry over. And our balancing figure will be 1,410,000 rand. Then we move on to the retained earnings account. So on the credit side, we're going to have our balance brought forward. And the amount is 270,000. Then on 2024 September the 15th, we repurchased shares. Remember, this amount in your retained income is the difference. So it's your R4.20 minus the R3.40, which was your average share price. That leaves us with a difference of 80 cents. So we're going to go to our CPJ. So we'll write bank. Cash payments journal. And the amount is then 37,000 times 80 cents, which is 29,600. 29,600. Then on the credit side, 2025 February 28th, we're going to write down appropriation account. We go to the general journal. And the amount is 363,950. That gives us a subtotal of 633,950. 633,950. And remember, your debit and your credit side must be the same. So on the debit side, 633,950. So our balancing figure will be 604,350, 604,350. So we'll write balance carry over and our balancing figure will be 604,350. Then on the credit side, March the 1st, we'll have our balance brought down. Brought forward, and the balance brought forward is then of course the 604,350. And And that is how you will complete your ordinary share capital account and your retained earnings account.